conference call of Sandhar Technologies Limited, hosted by Dolat Capital Markets Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shaili Jain from Dolat Capital. Thank you, and over to you, ma'am.
Thanks, Steve. Good morning, everyone. On behalf of Dolat Capital, I welcome you all in third quarter and 9-month FY25 conference call of Sandhar Technologies. From the management side, we have with us Mr. Jayant Davar, Chairman, Managing Director and CEO, and Mr. Yashpal Jain, Chief Financial Officer and Company Secretary of the company. We thank the management for providing us with the opportunity to host the call. Now, I hand over the call to the management for their opening remarks, followed by the question and answer session. Over to you, Jayant, sir.
Yeah, thank you. Good morning, ladies and gentlemen. I welcome you all to the quarter 3 and 9 months earnings con call of Sandhar Technologies Limited. Talking from a broad conceptual point of India had initially projected a growth rate of 6.5 to 7% for FY24-25. I think it's now been revised to 6.4% for the year ending March 25. It is the slowest in 4 years and below the lower end of government's initial projection. This obviously has come in also because of the weaker manufacturing sector and slower corporate investments. Last month, of course, the Reserve Bank of India lowered its growth forecast for the year ending March 2025 to 6.6% from its earlier forecast of 7.2% after India reported lower than expected growth of 5.4% in July to September quarter. The forecast by the National Statistics Office follows several disappointing economic indicators in the second half of 2024, including low growth, high inflation, anemic capital flows, and record trade gap. That casts doubt on the robustness of the country's growth. Manufacturing, which accounts for about 17% of GDP, is projected to expand at 5.3% year-on-year in 24-25, compared to 9.9% a year ago. Let me bring you to some good news, which is Sandhar's performance. Despite all the above, Sandhar's total income growth of 9.7% in quarter 3, where most of our peers actually could not grow, and 10.34% compared to last 9 months at a consolidated level have been pleasant. We anticipate that we will sustain and grow this momentum even further, of course, subject to geopolitical conditions, market demand, and so on and so forth. In terms of consolidated EBITDA, we registered a growth of 0.5%, which is 500 basis points improvement in the margins, to 10.34% compared to 9 months of the last year. Last year it was 10.1% compared to 9.6% in the 9 months of financial year 2024. In the two-wheeler segment, the industry recorded a growth of 13%. Sandhar outperformed with 17.58% increase on a 9-month year-on-year basis. In the four-wheeler segment, the industry grew by 2.72%, where Sandhar did see a decline. In the OHV segment, the industry grew by 5.3%, but Sandhar grew at 6.9% on a 9-month year-on-year basis. We're pleased to share that all our joint ventures are PAT positive in quarter 3 and 9 months of financial year 2025. This success has been driven by focused cost control, localization efforts, enhanced business synergies. we remain confident that the growth trajectory will continue. Collectively, our joint ventures have recorded a total income of 270 crores with an average EBITDA of 12.5%. The list has already, I think, been shared with you in the presentation. The drag for Sandhar has been the overseas business in Q3 as well as 9 months, and the operations sustained losses marked by low demand and slowdown in Europe. We are closely watching the situation over there, and as we look at it, the preliminary indicators are that volume should see growth in financial year 2026. The company's expansion projects in Pune for cabins and fabrication and die casting are expected to commence for commercial production by end of March 2025. In EVs, the company has started commercial production of battery chargers and is getting positive response from the market. The customer base is also gradually increasing with more and more customers that are being added. On CSR, over the years, we've dedicated ourselves to sustainable business practices that tackle economic, environmental, and social challenges. Our efforts go beyond mere business concerns, creating positive effects on the communities we serve. Our CSR activities focus on key areas through healthcare, which is through the Sandhar Healthcare Center, which is in this village, Begumpur, Khatola, Gurugram. We do education for girls' child largely in Sandhar Ki Beti and the Sandhar Center of Learning at Devli, Sangam Bihar. We have skilling and vocational training done through Swabhiman program, senior care through Adopt a Grant program, and for environment, we go green through Pinia Industrial Park, Bangalore. We are looking to focus on diversity and creating equal opportunities for gender neutrality. As we go forward, our focus areas will be towards ESG and SDG, which is Sustainable Development Goals, to attain carbon neutrality in the coming years. We continuously work on diversification of our product portfolio, expanding customer base, and increasing content per vehicle. We are focused on improving both return on capital employed and return on investment. We are consolidating operations, and the idea is to generate more free cash flows and deleveraging of the balance sheet. With those initial comments, I am happy. With me today is Mr. Yashpal Jain, the CFO of the company. We'd be very happy to take your questions on anything that you might have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Kundawar from Complete Circle. Please go ahead.
Hi, sir. Just wanted to ask you about the debt situation. Are we on track as per the last con call's guidance on reduction of debt?
Aditya, we are at a net debt of 673 crores. And if you remember last time, as we said that we will be finishing up some projects, especially the two ones which are going in Pune. So there can be intermittent ups and downs in the debt. But we are on the track, because there have been some outflows on account of capital payments for finishing up these projects, and remaining payments will be done in Q4. So as far as our regular operations are concerned, I think we are in the sustainable level, and we are continuing at a net debt of below 700 crores.
Got it, sir. Thank you. And the second question was that any further inquiries or updates on the smart lock side of the business? Any new inquiries or any new customer conversations that we are having?
team is consistently in follow-up with the OEMs because the product has already been developed. Now it's all the adoption and by the OEs. So we are waiting for some good news.
Very happy to announce that we have already started production and supply to two of the biggest names. As we speak now, traction is being built with some other customers, and the existing supplies that have started will pick up much larger volumes in these coming months.
Thank you, sir. Helpful. All the best.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Siddharth, an individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. Couple of questions. The first one being, I think around a year or so back, you had guided clearly that you see a 25% plus sort of a growth for a 3 to 5 year period. The last few quarters, to our understanding, should we take it as an exception and nothing changes structurally on that guidance? So that's my first question. The second is, there's a lot of media news around tariffs and how it's going to impact the auto ancillary thing. So if you can take a couple of minutes and sort of let us know if at all it plays out, how would it impact us in any which way? Thank you.
Okay. Thank you for that question. Very interesting question. And suffice to say that whatever guidances we had given in the past or forecasts we'd given in the past, keeping the economic condition of the country and how the growth is in geopolitical situations aside, we continue to build our pipelines towards the kind of growth that we had declared in the past. I don't see any reason why, if you've seen a little lower growth in the last quarter or in the 9 months gone by, yes, it is an exception. And I do believe that this should accelerate quite rapidly as we go forward. So that's the answer to question 1. What was your second question? Sorry.
It was more around the tariffs in US. How would it impact us if at all it plays out?
Well, the direct tariff thing that would have affected us was Mexico, because we have a plant in Mexico and a lot of our supplies go to North America, while on like-to-like basis, because most of our supplies go to companies like Bosch and TRW, who are located within Mexico. So it is not as if we would have a direct impact, but in case those people have an impact selling into the US, we would obviously be affected. At this point of time, while we have spoken to our immediate customers, they seem to be quite positive that there is likely to be no impact. However, we'll have to wait and see as to how, in case there is any impact, how much it is going to be and how we will have to take it or mitigate it in the future.
Sure, sir. Thank you so much. Very helpful. Thank you.
Participants who wish to ask a question may press star and 1. The next question is from the line of Jay Vitai from Dolat Capital. Please go ahead.
Hello. Hello, am I audible?
Yes, sir.
Yeah, hi. Hello, sir. Good morning, and thanks for the opportunity. So my first question would be, what are your thoughts on demand revival on the export side?
On the export side?
Yes, sir.
Well, I do believe that our customers are looking to buy more from India. This continues in the overall policy of most multinational companies looking at China plus one. India falls into that sweet spot, and I see no reason why exports from India will not grow. However, having said that, you know that the demand right now in Europe is weak. So it's not as if we are losing market share in exports. In fact, we are gaining market share. The only thing is, because the overall demand is down, there is an impact on India. Not so much on Sandhar, because Sandhar, largely, as you are aware, supplies within Europe, from Europe. So from a foreign exchange perspective, we are not affected. But from a local demand perspective, I do see that there is, and I already mentioned that our overseas business has been a drag with some losses in the 9 months and in the quarter. We are now being told that there are green shoots being seen, and the future looks a little better.
Okay, sure, sir. So, a follow-up question on that. So, what would be your order book from the overseas side and expected order book from the overseas?
I didn't get that question. Can you repeat that question, sir? Yeah.
So, what would be your order book coming into FY26? What are the order book expectations? Or any new order wins?
What is happening is we were using, you remember, we had put up a plant in Romania, and the Romanian plant could not build up and got delayed on account of the Ukraine war. It has now stabilized, and we do expect that we will have a much larger percentage manufacturing capability being consumed in the coming year. We are very, very bullish on the next year, and we do feel that the loss that we have had in this current year will not continue into the next year, and we will be back in profits.
Okay, thanks. Also, I just one bookkeeping question. Out of 700 crores of debt you mentioned previously, could you quantify what would be the debt in your JV?
Yeah, this does not include the JV debt. This is because JVs are not consolidated as per the Ind AS. So this is the debt at the console level with the subsidiaries and the standalone company. JV debt is separate, which is not accounted in our books, but I can tell you the amount. It is barely around 8.5 crores as of December in two of the JVs combined together.
Yes, sir, we also want to break it up and give it to them in terms of our foreign exchange debt and here.
Yeah, sure. So out of a gross debt of 708, 284 pertains to standalone, 100 for Indian subsidiaries, and 324 for overseas subsidiaries. And the cash balance of 35 crores to make it a net debt stands at India level.
Okay.
So,
Thanks a lot.
Yeah.
Thanks a lot, sir. Thanks a lot. I'll fall back in the queue.
Sure.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
सर जी सर नमस्कार, आप मुझे सुन पा रहे हैं? हेलो.
Yes, we can hear you, sir.
Yeah, thank you, sir. Sir, as you alluded in your opening remarks that the path ahead would be the improvement in the EBITDA margin and the deleveraging exercise. So if you could just give some more color on what steps would be towards deleveraging and what are we eyeing in terms of lowering the net debt levels from the current, and what have been the 9-month capex that we have done?
Yes, sir, can you give the numbers?
Yeah, sure. So basically, in 9 months, we have done a capex of around 173 crores to finish up the regular capex as well as the ongoing projects. So this is the capex count for 9 months. As far as deleveraging of the balance sheet is concerned, as we have said in our opening remarks, that this year we will be finishing up some projects. So as far as the debt is concerned, it is within our estimate figures. But yes, Q4 there might be some increase in the debt to repay our commitments to finish up the project. But next year, yes, we will be generating the cash flows which will be used to repay this borrowing that we will be taking in the current financial year. So I think on an average basis, 100 crores would be our repayment in terms of the, I would say, terms and conditions of the term loans, which we have secured from various lenders.
Okay. So so on a peak debt of whatever we will be hitting for Q4, there will be a reduction of 100 crore for the next financial year. This should be the idea.
Yeah, around 100 crores is the normal payments that has been made, projected as per the own payments. If we generate further surplus and what has to be invested, then we can pay more also.
Okay. And sir, sir, earlier call you did guided about EBITDA margin increasing or inching up to 11.5% mark for the next financial year, that is 25-26. Correct me there, sir. And top line of 4,500 crore on a console level. So does, taking into account our Q3 numbers, does that trajectory holds true currently, or would you like to revise it?
So here I would like to little bit correct you, because EBITDA margin that we have projected for this year was 50 point basis improvement, which is something around 10.45% of upper cap. For next year, another 50 point basis we have put up the improvement, so that was around 10.95%. 11.5% for 25-26 we haven't projected, and I remember that we have not shared on the call also. But yes, we see that 11% is a healthy margin, looking to a diversified business and the various systems that we are seeing in the industry as well as the global scenario. 4,500 crores of turnover, yes, that we have projected for FY26, and I think there is no reason we should not achieve it.
Sir, your voice is breaking. Come again, sir.
So as far as turnover is concerned, 4,500 crores, I think there is no reason that we should not achieve it. We can achieve it in FY 25-26, subject to the things moving in the right direction. As far as EBITDA is concerned, we haven't projected 11.5%. For next year, we have kept a correction of 50 point basis from 10.45. That was the upper range for this financial year. So that was around 10.95 that we have projected, that will be between 10.50 to 10.595 in FY 25-26.
Okay. And sir, there were some new lines which were to be on stream for January 25. So are we done with that, and that will be contributing towards Q4?
Yes, lines are ready, but I think the volumes will be coming in the quarter one of FY 25-26, because some testings are going on from the customer side. So there's some little bit delays from the customer side. But from our side, we are ready with the lines. So I think the volumes will hit in the Q1 of FY 26.
Okay. And sir, lastly, sir, on the overseas subsidiaries losses, can you give the absolute number for this quarter and for the 9 months? How have the net been from the overseas subsidiaries? Sure. The contribution to
so at the EBT level for overseas subsidiaries combined together, we have sustained a loss of 17.35 crores. And for quarter 3, at a console level, it is 10.78 crores.
Okay. And taking into the account the current environment, this should be the continuity for Q4 also, sir?
Q4 also, we had discussion with the overseas team. They are seeing that the volumes are rebounding back. So I think there should be an improvement in the numbers once the Q4 numbers are in front of us. So the losses should reduce, but let's see how Q4 behaves and how is the volume, depending on what the policy US adopts in the coming period of time.
Sir, a small point to conclude, the way the 9-month growth numbers are, so we should be looking to end the year on the same pace in terms of the revenue trajectory for the current financial year. We are already halfway through the quarter. So I taking into account
we should around 4,000 crores of revenue for this current financial year that we are projecting.
Okay, and margins should improve for Q4, or it will be the same trajectory as Q3 has been?
Should be an improvement in margins in Q4, because if you see for this quarter, the major drag has been because of overseas business in terms of revenue, in terms of profitability. As far as Indian operations are concerned, we take into account they have shown a very good improvement in terms of margins also and turnover also. So fourth quarter, even if you achieve an growth in overseas, I think the margin should be better compared to Q3.
And sir, 2 points on firstly on the RM also. What are the key constituents for RM? And the answer, I think so earlier in the call last time also you mentioned about we are creating presence in some of the products which are in nascent stage, and that will be that the market will grow. I think so you were referring to the EV space. So in terms of the breakthrough and the EV ecosystem currently, what we are hearing from Europe and other economies in terms of EV adoption also taking a backseat and hybrid gaming. So कैसा सर रूपरेखा कैसी देख रहे हैं आप EV स्पेस के लिए सर?
So you want to answer this question?
All right. Okay. Where EVs are concerned, while there is a little bit of a slowdown in the EV space, the fortunate thing for us is because we have a completely localized solution. The dependence on China being brought down, we are getting traction more than some of the others, and therefore we do see an improvement in our traction towards more growth in the EV sector. However, EV is always been a question mark, will remain a question mark. Today you're listening to a lot of things where they say that hydrogen may be the fuel of the future. We will have to wait and see. I understand companies like BMW have stopped working on battery technologies for the future and they are concentrating on hydrogen. So we'll have to wait and see. But for us, the investment that we have made in the EV space, which is largely for two-wheelers in the form of battery chargers and motor controllers, we have traction and you will see growth there on a regular basis.
Okay. And lastly, sir, in your presentation, if we can provide this debt number breakup also, which just Yashpal sir answered to the previous participant.
Sure, we can do that. We can do that. If you want, we can repeat it again. Including what is working capital term loan, but in the presentation, yeah, sure, Yashpal, we will be happy to give you those details.
And more suggestion.
You want a breakup? You want a breakup of the debt? Hello?
You gave, sir. You gave. I have noted it down. Only one more suggestion was there, sir. If we can arrange this conference call for the investors and the analyst community in the second half of the day, I think so we can have better participation than the very early morning hours of 10 a.m. It's a basic suggestion I have. Since now we are at the fag end of the earning call, we have ample space slot. If the management can suffice with that request, sir, at 4 p.m. or 3:30.
We'll explore that. We'll explore with the research agency as well as the Chorus team also, how that works out.
Thank you, sir. Thank you and all the best.
Thank you. Thank you. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question to the management, you may press star and 1. The next question is from the line of Jyoti Singh from Orient Capital Markets. Please go ahead.
Yeah, thank you for the opportunity. Sir, my question is on the sheet metal side. As earlier, last Q2, we have seen the double growth in this segment. So going forward, what are expectation? And earlier, we were the current utilization around 55 to 82%. So what's the current utilization and any additional capex on that side?
Yes, Palji, you want to come in with whatever our plans are?
Yeah. So like in sheet metal, as you can see that we have been doing, we set up new facilities over a period of in last 4 years. We have set up 4 new manufacturing facilities in sheet metal, and the customer response has been good. This time also in 3 months period, quarter 3, the share is 15%. Sheet metal is 14%. As of now, we are in the process of developing some new more products because there has been some slowdown from the customer side in some of the models. So on a continuous basis, we see a growth of sheet metal and it's operating presently at 80-85% in between capacity. And there is a major project coming up in sheet metal which require a heavy capex. It's a routine capex like adding 1 or 2 machines or adding 1 or 2 facility. I mean not facilities within the set of plant and assets. That is how. But we are not expecting any major organic capex to be pumped into sheet metal business.
Yeah, we need to optimize the facilities that have already been put into place. And as Yashpalji said, all we will need probably is some balancing equipment, which will open up the capacity even furthermore for utilization as we go forward. The traction is good, the growth is good, and the double-digit growth that you are looking at in the sheet metal business so far will continue as we go forward.
Ms. Jyoti, does that answer your question?
Yes. So I'm asking another question on the product pipeline side. Sir, if you can explain, like last quarter you mentioned multiple parts were under development and that come in 2026. So if you can comment on that side.
Yes, sir, you have a list of the sheet metal parts coming in, right?
Yeah, but it's a very long.
Sheet metal parts, Jyoti, or all parts?
Sheet metal side, sir.
Yeah, okay.
So actually, the list is very lengthy, but in a nutshell, I can say that the parts are under development, and more parts, around 18 to 20 new parts will be added in the pipeline to our business. And some of them would be in this quarter, like quarter 4, and remaining will be in Q1 of FY26. Just to point out here that the development of part is consistent to the business. It is a continuous process as and when the customer asks us. So 18 to 20 new parts will be added over a period of next to 3-4 months. And that will be added up in a turnover in the coming period of time. And that keeps on going. It's not that the activity stops at some point of time. It is a regular activity.
But if you want a little more details, I can only add that a large part of it has to do with bodies, frames, and so on and so forth. They are large parts which are being fabricated.
Yeah.
Thank you, sir. And sir, just last question on the overall industry basis, because most of the auto ancillary company, they are facing issue to not getting more order and issue on the European and US side. So when we are seeing, we are expecting and seeing the recovery on that side?
Well, right now, Jyoti will be happy to know we don't have a shortage of orders per se. Yes, the industry slowed down a little bit. But despite the industry slowing down, we are outperforming the market on account of addition in our wallet share of new components that are being given to us. We are very hopeful that this trend will continue. We are seeing that the industry itself is also picking up. So if the industry picks up, quarter 3 was not a good quarter for the industry. But despite that, we seem to have done well. We will continue our outperformance, and that is our plan, and that is what seems to be on the table as we sit today.
Okay, sir. If I can squeeze one more question on the on the Hyundai side, what's the update on that side that we started a schedule on March and originally in November?
Yeah. So Hyundai, the mirrors are ready. They are now being tested as we speak. That project was a little delayed by Hyundai because this was import substitution completely. It has now been agreed that the products that we have supplied are being tested right now in Korea, as also in the endurance test in India. So this whole project got delayed, and I understand now the SOPs now begin somewhere in the month of July or August. That is when the full-fledged thing will get converted into our products being supplied locally.
Okay, thank you so much, sir.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Bhaskar Shekhar, an individual investor. Please go ahead.
Hello, sir. Thank you for giving me this opportunity. I would want to ask how much of margin improvement can be seen on account of the smart lock production. I guess in the last con call you spoke about the smart locks are going to be manufactured from the month of Jan. My question is, has the supply started for that bit? And also, are we going to see good improvement in margins because of this part?
Yes. So the quick answer is yes. We started our supplies to Suzuki motorcycle, for example. That started, but the volumes were low. We have now been, these are now being ramped up to a level of almost 20,000 a month, which should happen as we speak, starting from March. And for the next year, the volumes look very, very healthy. In terms of the margins of the business, yes, the margins are higher, both in terms of percentage, but because the product value itself is about 10 times higher than the regular locks that we do, we expect the volume of profit would be much higher. Does that answer your question, sir?
So are they going to reflect in the Q4 results?
Some part of it, small part will, but most part of it will reflect in the next year. From the first quarters of next financial year.
Okay, sir. Got that. Thank you, sir.
Thank you. The next question is from the line of Shelly Chen from Dolat Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, the tax rate was really higher for this quarter. So what kind of tax rate are we looking for the whole year and FY26?
Taxation you are asking?
Yeah.
So the taxation rates remains 25%, 25.17%. 27% it goes because there is a deferred tax impact also. The government rates we are subject to 25.17, whatever comes with the tax also. So sometimes the swing comes up on account of, because what happens, we have to create a deferred tax, sometimes deferred tax penalties as per the standards. Otherwise, the output remains the same as the government tax.
Sir, sorry to interrupt. We were unable to hear you. Could you please repeat?
Hello?
Yes, sir.
I am audible now?
Yes, sir. Better.
Yeah. So, Sally, the standard rate of taxation is 25% for our company, right? And the changes in the tax rates many times happens because of the changes in the overseas, because we are consolidating along with the overseas accounts. But on an overall basis, it remains to be 25% for us. And there is always an impact of deferred tax. So sometimes it increases the tax content, sometimes it decreases the tax content. This is a change. Otherwise, the standard rate remains the same.
Yeah. Thank you, sir. And one more question was there that could you please run me through how your JV's performance, how Sandhar Ankin, how Sandhar Vetron are doing, and what sort of revenue did they do for this quarter?
Yeah, sure. So, I can give you a revenue for quarter 3 also, and if you want 9 months, I can provide 9 months figures also. Well, Sandhar Ankin is back into the profits consistently from last couple of quarters. And as far as another entity, Winnercom you have asked?
Yes, Vetron and Winnercom.
Winnercom is again in profit. So if you ask me for quarter 3, like Sandhar Ankin has done a profit of 95 lakhs, Winnercom has done 75 lakhs, and this other company, it has done a profit of 1.69 crores. And for 9 months, the profit of Sandhar Ankin has been 3.29 crores, Winnercom has been 2.22 crores, and Sandhar Ankin has been 3.31 crores. Right? So in terms of turnover also, for Sandhar Ankin has done a turnover of 50 crores, Winnercom has done 48 crores, and 22 crores has been Sandhar Ankin.
Thank you, sir. And how are we doing on our vision and locking system?
Which one? Can you repeat the question?
How are we doing in our locking system and vision system?
Yeah, locking and vision system is going good as usual. We have around 25% of revenue contribution from locking and vision combined together. And they are at a better margins in this year compared to the last year, except the four-wheelers, where we are facing some down volumes from Honda side.
Okay.
Two-wheelers is doing better.
So how are we planning to revise this for four-wheelers? Is this trend going to be on a similar side, or do you think this trend needs to be changed?
There are new models coming in, and those new models are going to be launched. And we are very hopeful that this thing will change. We are also aware of the Hyundai business, which we spoke about in the previous question. With all this new businesses being added, which are better margin businesses, we will see a reversal in the next year in the four-wheeler business.
Yes, sir. Thank you. That sums up my question.
Thank you.
Thank you. The next question is from the line of Pritesh Chedda from Lucky Investments. Please go ahead.
Yeah, sir, the south-based OE or two-wheeler OE, what is the as a percentage of your sales?
When you say south-based, are we talking about TVS? Are we talking about Royal Enfield?
TVS.
Are we talking about Honda?
TVS.
TVS, I think, in all our businesses put together, including the new sheet metal business, which has also been added, I think we are close to about 30%. What is the number, Yashpalji?
32%, sir.
32%.
Yeah.
And what was the growth in 9 months for this OE for us?
Year to year.
So 9 months or year on year, you want to say?
Yeah, 9 months this year. 9 months this year versus 9 months last year.
So this year it is 33% of our revenue. Last year it was 30% of our revenue.
So, which means 110. So that OE has grown 20% for you.
Yes.
And the sheet metal, what is the total investment that you had done in sheet metal?
Sheet metal total investment, you want combined total business including North?
Yeah, whatever plants you have put for sheet metal in the recent last...
The new plant?
Yeah. So recently we have put 4 plants that we have disclosed in the earlier calls also.
Sir, your voice is not clear.
We have put up 4 plants in recent times in last 3 years in sheet metal. And the total investment is close to 285 to 290 crores in between.
Hello.
Could you hear it? The total investment has been between 280 to 290 crores in the sheet metal business in the last 3 years.
Sir, I couldn't hear it.
Well, we are audible. I think there is some issue with the audio. I can hear.
The total investment, sir, is 280 to 290 crores in the sheet metal business in the new plants that have been set up in the last 3 years.
Okay. And the asset turn on this was?
What is the revenue, Yashpalji, out of this so far?
So the asset turn is close to 2.5 times as of now. 2.5 times. Can you hear me? Hello?
2.5 times, sir. Can you hear us?
Sorry to interrupt, sir. The participant has been disconnected.
Okay.
You can take up a new participant in the meantime.
Yes, sir. Actually, there are no further participants. I now hand the conference over to the management for closing comments.
Sure. All right. In that case, let me thank all the participants who joined us this morning. We will also keep into consideration the request that this be done in the afternoon. We will see in case that is possible today, keeping all the aligned parties in check. We do, like Yashpalji said, the forecast for this quarter seems to be better than what it was last year. We are also quite confident of achieving what we had set out to achieve in terms of our business plan at the end of this financial year. Once again, I want to thank Dolat Capital and everyone who put this call together. We as a company are open to taking your questions even individually whenever you want any more information and we'll revert to you in the shortest period of time. With that, I want to thank you all once again and all the best.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.